Outlook for crude oil. Inventories go down and prices will go up. Torsten, welcome back again. We want to talk now about crude oil. I would say, the king or the queen of the commodities. It doesn't matter how we see it. But anyway, crude oil is very important for our world economy. What is about going on supply demand? Where are the balances or imbalances in the market?
Yeah, the black oil definitely is moving the needle in terms of commodity index returns, and also has like a prediction function for the rest of the commodity markets in regard to returns, in regard of costs, for example, gasoline, diesel. And this is one of the major questions in terms of the supply glut we've seen in the last years, overproduction coming from the US shale boom and showing like a huge supply glut. And the key question is, how fast are we moving out of a supply glut into a more balanced market so that we have like a fundamental based rally in the crude oil price again?
Okay, so you think there's a possibility that we can move out of this supply glut? We are still at very high levels of the production for sure. Yeah. So what is good? You named it a chicken game. Why is it a chicken game?
When you compare it to the 70s, for example, when you have a situation that OPEC was limiting production, so therefore the strategy reversed. As this time OPEC is the key parameter in making oil as cheap as it is. So the reaction on a rising production from the US in terms of a shale boom normally would be like a cutback in OPEC production, and we haven't seen this last year in November. On the contrary, we have a high production from OPEC still. We have still a high production from Russia, also in terms of a currency to gain the hard dollar assets. And as a third factor, we have Iran, Republic of Iran, also entering the game after the sanctions were lifted. So therefore, there is a reason for cheap oil prices. The reason that we have like a $26 oil price, probably very neglectable. But a $40 to $45 level definitely are here in the cards. But the key thing is how is the inventory development going on, and how are the rig counts reacting the US to get US out of a game again. So the guy who disturbed the game, so therefore the chicken game, has to get out of the scene again.
Fantastic. But you just mentioned the rig count, of course, and also what the crude production in the US. There is the rig count is really imminent. So what do you see here actually?
Yeah, the rig count data is highly regarded as it's weekly data and is watched from everybody on a Friday late evening. So therefore, rig count data implies that you see a reduction in rig counts. So with a time lag, normally you have to see that production is falling. So like a 6-month time lag, for example, in the US, when you shut down rigs, you see like the reaction in production. When we've already seen that, comparing to the situation of the 90s, rig counts are down 60% from their tops. Production in the US is a bit resilient, so we lost from top 800,000 barrels a day in terms of production, mostly from the shale. It's not enough yet, so therefore we keep a very sharp eyes on current oil price development, as the moving up of oil prices is a little bit too premature at this stage of a cycle.
Okay, interesting. What is another key indicator? I mean, OECD inventories, for example, that's very important. What is going on there?
Yeah, people tend to watch the US inventory because the data is more frequent. To get a broader picture, we are supposing to look at the OECD data. And I think from this perspective, it is the key indicator for the oil market to identify if a price upswing, a price rally is really sustainable. So first we have the oil glut, oversupply of oil in the market. The market balance is getting better, so therefore it's still an overproduction what we have in the moment, but it's getting to a better level. But the key indicator is if you see like the inventory side to be reduced. So we've seen last week a first week of negative inventory data for the US. We are on an OECD level still on a peak. If this data is about to reverse, this is the same like in the mid-90s, when you have a very solid base for a recovery of oil prices. And therefore we see prices about probably $60 to $80 as possible in this context.
So what is your advice for an investor?
Get rid of the noise in the market to watch the inventory levels. If they turn, get into dollar-denominated or production-denominated energy assets like the stocks, the companies, and the assets itself.
Super, there's nothing to add. Torsten, thank you very much on that. Ladies and gentlemen, that was Dr. Torsten Dennin, the Chief Strategist of Tiberius Asset Management from Zug. And you heard it, crude oil is coming back on track, and watch the inventories of the OECD. Actually, I think also that's a very interesting factor and indicator, and when they are really start to come down, then it's definitely time to get into it. I'm your host, Jochen Steiger, from Commodity TV in partnership with Dukascopy TV. Thanks for watching us. Bye-bye from Geneva.